I am mining investor and editor of Resource Stock Digest. I'm back, y'all. I am Gerardo Del Real here with my partner, Mr. Nick Hodge, who is also an investor and the publisher of Daily Profit Cycle. This is the 268th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk gold. We're going to talk rates. We're going to talk Jerome, uranium, copper markets, all the bizarro madness that's going on out there. A couple of deals that we're looking at, a couple of deals that we've invested in that have done well, that I think will continue to do well. But before we get to all of that, Mr. Hodge, how are you, senor? It's good to be back.
Welcome back. Held it down there without you. Glad to have you back so I don't have to talk quite as much. Doing well on my side of things. How are you?
I'm well. My only fear is that everyone says I talk too much. So now I have an extra week to make up for, and they might get double the rants and double the raves. But no, I'm well. The triple's phenomenal. Happy to be back in the seat.
Good. Glad to have you back. How are the Cubs doing? I don't think not as well as you hope, I think, is what the answer is.
No, this is the first place Chicago Cubs. We're rocking and roaring. Despite the fact that half of our stars are on the injured list, or our star pitcher, who was third in Cy Young voting last year, he's been out for the last month. One of our star sluggers, he's been out for the last 3 weeks. Another one of our star sluggers, who we just re-signed, he broke 2 ribs and is out for 3 weeks. But despite all of that, we're first in our division, so we're ripping and roaring, man.
You froze up on me for a second, but I thought they were a couple of games back for some reason or another. But congratulations, I'm glad they're in first place.
We've been cooking. In fairness, I haven't seen today's game. We were tied for first yesterday. We won yesterday. We were half a game up, and depending on what the Brewers did and what the Cubs did against the Mets, that's where we're at. But at the very least, we're half a game back in the best case scenario. We're half a game ahead of the Brewers, and we're hosting the Brewers here starting tomorrow. So important series for us early in the season. But look, if we can do this well with half our stars on the injured list, I'm really optimistic about what the rest of the year looks like. So no, things are good. Let's get right into the markets. Jerome. I don't know if you saw the press conference, but every time Jerome lied, he cleared his throat. And so now I'm coughing, right? But no, look, I saw the press conference. What can I say about the guy? Like, he's gonna double talk his way to either a soft landing or like blowing something up, and the something is probably going to be bank and rate related, right? I mean, Japan has had to intervene in their FX markets here the last couple of weeks. They denied it initially, then they clearly got in there. The dollar index has been surging, has been above the 106 level, and yet the markets are seemingly taking the press conference and the Fed decision as dovish in nature, at least the way that I'm interpreting it. How are you seeing it? You watch the 10-year as hawkishly as I do it, and then possibly even more. You keep your eye on the VIX a lot more than I do. But first off, did you get to see the press conference? And second, if you did, or if you read the notes, thoughts on that?
Yeah, I turned it on while I was eating some lunch yesterday, so I had a chance to check it out, and I read some of the notes and reviews. I mean, it's higher for longer with a side dish of dovish bones thrown, but mostly lip service, I think. So, I went back and I was looking at stuff that I was saying in the fall, and it's sort of the most intelligent thing I said was that doing nothing is not dovish and it's not a cut, right? Like, doing nothing is higher rates for longer. And that's what it's been, and that's what it's going to be. And like you said, he's just double speaking on both sides of that, right? 1 month he's saying you're going to get cuts. 1 month he's saying you're going to get hikes. But really, it's just you're going to get where rates are at for longer until he sees, right? He says he's data dependent. The inflation was coming down, so I think he's okay with it around, 3.7% or whatever. I think he's okay with where the job market is. I think he wants to appear neutral in an election year. So, I don't think he wants to do anything. And if it didn't happen at this meeting, I don't think it's going to happen as you get closer to November. The stock market's been okay. You say it's taking it as dovish. I think it's sort of just ignoring it and pricing in other things like growth and GDP and earnings and things. So a couple of weeks ago, I was saying it's time to tune out the Fed, and I think the market continues to do that to a certain extent. I think it's pricing in 0 rate cuts at this point. So, the market is so hyper and short-term focused these days that, rates pulled back a little bit the day after Jerome spoke, but now that's being attributed to, maybe a jobs number that's, not going to be what the market thought it would be. I think that's getting too granular. Overall, I think you get higher for longer rates, and I think different asset classes are doing things for their own reasons, including, you mentioned the dollar and rates. Gold continues to be bullish despite those higher rates and stronger dollars. So more of the same in many respects, I guess, is what I would say.
Let's be a little forward looking, right? Because markets are forward looking. We are in the second quarter. If we think that Jerome's going to stay neutral, and maybe the answer is it doesn't matter, but I think it'll be consequential in the next quarter towards the end of it. But if the Fed's going to decide to stay neutral until November, I do believe, I'm of the opinion that Jerome will start softening the language and the tone, probably the meeting before the election plays out, setting the table for that eventual rate cut. Do you think the markets are going to front run that in both the broader indices and in the commodity markets? Because thus far, you're right. I think the broader indices, although they're interpreting what he's saying as dovish, have kind of reacted in a neutral fashion. You mentioned the bullish tone that gold has. That's largely due to central bank buying from the East. And then we talked about that here the last time you and I were on this podcast together. So I guess in the short term, I think not much of an effect, but I do believe towards the end of the third quarter, markets will start front running that. Is that something you see on the table for the commodity space and for the broader indices and rates?
So the broader indices have softened because tech has softened, and so tech has had a much larger, weighting in the indices than other sectors. It's much larger than other sectors. One of the Magnificent Seven is bigger than the entire gold space, for example, right? So I think the overall, indices can soften while other things can remain bullish just because those tech companies are soft and they're so big. So the other thing I wanted to say is you said, the Fed being, let's say the Fed is neutral. So let's say everything stays where it's at. And I think the market is going to start to then price in or reflect other things, namely growth and inflation, right? So here's what's happened. You had, a U.S. recession that never materialized. You had growth last year in the third quarter that was almost 5%. And then it slowed down from there. So the number while you were out was 1.6% for U.S. GDP for the first quarter. So that growth is slowing. It's not contracting. It's not negative. You can't get a recession without negative growth. But that growth is slowing down. At the same time, the inflation has remained sticky high. So, it's a classic stagflationary environment. And so,
he doesn't see the stag or the flation, Nick. That's what he said. That's what he said. I don't see the stag or the flation. I'm like,
no, come on, man. No, we could talk more about inflation if you'd like, whether that's copper or oil or insurance rates. No, come on. So this is what I'm going to say. In that sort of environment, other things can do well, right? It might not be the Metas and the Teslas, ripping the way they were. But if you look at the chart of, copper producers right now, for example, they're doing quite well. And some other industrial names are doing well. Utilities have started to even do better despite the higher rates. So I guess in that stagflationary environment, what I'm saying is that, commodities can do well. The things that, people always say you can drop on your foot. And we've continued to see that with uranium, uranium ticking up to $91 for the first time in 2 months. I meant to say copper, but, firmly above $4.50, not looking like it wants to break down. And so I think that's what the market's pricing in: lower growth, higher rates, and higher commodity prices, which are the things that are inflating. So I don't know if that answers your question or not. But
I think it fits in line with our commodity super cycle thesis, right? And I wrote about this here the last couple of weeks. I told you last week that I anticipated a slight pullback in the precious metal space, and simply because things don't go straight up. I just had a conversation with a good friend of mine who was up 10,000% in 2 years and a half on Patriot, and now is only up 5,000%. And I had to remind him that 5,000% on a 2.5 year timeline is pretty darn good, and he should really be excited about the next 2.5 years as opposed to looking at it as being down 50% from the all-time highs, which of course, once you get to a certain point, you're counting in dollars, and when you're dealing with the amount of dollars that he's dealing with, in his mind, he's going, oh my God, what happened to all those dollars? And in my mind, I'm going, healthy correction in an absolutely bullish trend and bullish cycle. And this is just how it goes. Things don't go straight up. I say all of that to say, I think we're going to get the same thing in the gold space. I think you're seeing a slight correction now. I do believe it'll be short-lived. I think you're seeing it in the copper space right now. I think we're at 435, 436, 437. We were just at 454, 455, 456. Listen, again, take a look at the forest and forget the couple of trees, and the trend is your friend in the copper space, in the precious metal space. And I think 3 months from now, 6 months from now, we're going to be looking back and realizing we probably should have bought these dips, because I don't think these dips are going to be as long-lived as some of the previous ones have been. That goes for uranium as well, which brings me to my next question for you, Mr. Hodge. Bitcoin, everybody was excited about the halving, right? Everybody was ready for 75,000, 80,000, 90,000 Bitcoin. I know the answer to the question because our in-house expert, Chris Groh, has already answered it for us as to the direction and the opportunity. But in your eyes, is Bitcoin in the 50 level attractive? Is it by the dip type of situation? Is it an opportunity or a bear trap?
I think it depends on your time frame. I mean, I think it's broken down. I think it's broken down in the short term. I mean, once it got below 60,000, that's a psychological level and a technical level. And so it really needs to recapture that. I checked a couple of times today and it had not done that. So short-term bearish is the answer. And you can see that across the board. So in, Ethereum and other crypto coins as well. And in the related equities, the new ETFs that came out. And so there's a learning curve for those, right? Because I think, people who have invested in Bitcoin, the coin itself, over time have, grown accustomed to the volatility that it has and the swings that it has, but not necessarily people that have recently bought it via the ETFs. So, and then other related names are down. Like I took a flyer on Square recently, and that's got hit. That's, relates to the tech stocks being down that I talked about earlier. So definitely soft in the short term and has, separated from gold and is, again, what I was saying, these assets are doing their sort of own thing. If you have a longer term time frame, if you have it in a safe in your basement versus, trading it every day on an exchange, that's a different thing. Then, you could view it as a time to buy, because I do, think it's going to be 6 figures and higher in the long term. But, in the next, 4 to 6 weeks, say, it's broken down in chart wise.
I like it. Let's get back to the overall indices. What are you doing with your capital right now, Mr. Hodge? What are the sectors that you're comfortable writing checks in, or companies, even if you don't mind throwing one or two out there that you see as opportunities? We've talked Mawson Gold recently on this podcast over the last couple of months. It's performed beautifully as Southern Cross Gold, its 51% owned subsidiary, continues to deliver phenomenal results from the Sunday Creek project, right? I think that's going to continue. And I think, Mawson absolutely heads higher as Southern Cross Gold is now pursuing a Canadian listing. And I think high-grade gold in Australia, in a great jurisdiction like that, resonates really well, even with Canadian retail, and it will certainly resonate well with American retail. But is there a sector or sectors, and it can be tech, it can be cannabis, it can be, we'll talk the recent cannabis decision here by the government. But is there a sector that you see as opportunistic right now for the average, family office or retail speculator that's trying to get an edge and maybe, get ahead of the curve, or as Mr. Dines used to say, trade ahead of the herd, right?
Yeah. You asked about broad markets. So let's start there. Then, maybe we can talk about speculations and writing checks. So, we still own a fair amount of cash, but we have been deploying it into other sectors. The most recent ones have been copper, energy, and Europe. So we started buying copper back in February. I've talked about that a couple of times. We did that by buying China, and we did that by buying a copper ETF. That both those positions, worked out. We've since sold China. took profits on it, and the copper ETF is up some 25% in 2 months, and that's a pretty good move for a copper ETF that holds the producers, big names. If you look at the charts of the Southern Coppers and other large producers of the world, they're doing quite well. Last week while you were gone, I talked about the BHP's takeout offer for Anglo, for example, and so. Copper has been a place you can put money. We did put money, and then you can still allocate to, whether that's, in a copper ETF or in an individual copper producing company, or in a country ETF that has a lot of copper miners within it, like, Chile, for example. Energy has been doing well. Oil's been one of the things that are inflating. We straight up, bought the energy sector, and that's done well, and I think we'll continue to do well, whether that's the producers, the big names like Exxon and Chevron of the world, or the midstream on down, right? So to the drillers. So, take a look at the oil sector. You mentioned cannabis. I talked a lot about that last week, actually.
Yep.
That was great timing, not just for the podcast, but also where the rubber meets the road in the services in my portfolio. So we've traded cannabis. We had traded cannabis once already this year profitably in the Hodge family office, and literally last week, I recommended another position in cannabis, saying that, the chatter was increasing about the DEA rescheduling it. And then, lo and behold, last week, the news broke that, sources, close to the situation who want to stay unnamed, say that they're going to reschedule the cannabis. And the names were up that day, some 30 to 40% across the board. And, we sold for double-digit gains in a week. That's, pretty good work if you can get it, right? And it did turn out to be sort of sell the news again as those names broke down again. So again, back to time frame, right? One was the short-term trade, and we took profits. And the next day it was a sell the news type deal. And these names, since they ran when Canada legalized in 2017, et cetera, they're still down some, 70 to 80% across the board. So with a long enough time frame, depending on what your goals are, it is the sector you can still allocate to. And we do in foundational profits. So 3, I guess, sectors right there. And then you were talking about writing checks. So writing checks is different because it's not like you're writing checks into oil and gas, production companies like Exxon and Chevron. You're almost, you're more limited into your sectors, into sectors that are, raising capital because they have burns, et cetera. So I normally just break it down by commodity, right? And when I look at my buckets, it's, kind of equally weighted almost, a little bit outsized, I would say, lithium, but gold and uranium and copper. And so, we see a lot of deals, and now I feel like I'm talking a lot, but deals that have come across our desk in the past couple of weeks are in those sectors, right? I mean, gold and
Good deals
uranium
as well. Quality deals.
Specifically, right? And so what happens is, you got to evaluate the deals, and you can't kiss all the girls, as we always say, right? And I have a lot of quality positions as it is. Like, I feel like I own a lot of quality, speculations in those commodities. And so the other thing I'd say is, what I've been saying is now you have the opportunity to still be highly selective, right? Because it's not like the TSXV is ripping. It's not like, all the juniors are ripping. We've seen some response in the mid-tiers and the majors, but I think you still have time in the juniors, and that means you can be selective. And so you really can do your due diligence and, decide which management teams and share structures and companies you want to own. And that's what we're doing, I guess.
Yeah, great answer. And I'll add to that, you already said it, but timeline is so critical when you're allocating capital, right? I had a subscriber write in maybe a month or so ago asking why I keep writing and mentioning lithium in the podcast, writing about lithium in the letter, and long-term subscriber and watches the podcast. And thank you, by the way, to all of you that do so. But why do you keep mentioning lithium? And the reason is because it's off some 85% from the all-time highs here recently, and the supply-demand fundamentals are still absolutely compelling and positive and favorable. And so when you get a pullback of that nature, and you have even like the Patriot battery metals of the world, get beat down some 60, 70% at one point, that presents as compelling an opportunity if you have the right timeline. Now, does that mean that if you buy Patriot today or you buy a lithium speculation today and they continue to be successful, that the company automatically goes to new all-time highs. No, that's not how severe contractions work, right? But if you have a decent enough timeline to let the catalyst play out and let the trend become your friend again, that's a very, very powerful way to make money in this space. You have to know what you own. I mentioned that friend that, is up 5,000%, but was up 10,000%. He's stressed out about it. And I had the same conversation with him. What is your rush? You still own 99% of your Patriot. Patriot's executing beautifully on all fronts. There's likely to be news on the Albemarle MOU because that timeline is nearing its completion here in the next couple of weeks. I expect an update there soon, I would hope, and anticipate it's going to be a positive update. That'll be a really big endorsement for the Corvette project. And look, the bottom line is we've seen some good results from James Bay and North American Lithium in general, but there is only one Corvette, folks. And at the end of the day, if Corvette isn't permitted and built, nothing will be. You can just take that to the bank like that. That is going to be a phenomenally profitable deposit or sets of deposits that is in a phenomenally favorable jurisdiction with excellent leadership. Leadership that, by the way, I think recently hasn't done itself a favor by not speaking to the retail audience as much as it used to. That's a personal, take as a shareholder that's been in the place since the very beginning. And as someone that, kind of helps advise a lot of family offices that have rather large Patriot shareholdings, I think they've done a phenomenal job marketing to institutions. I think they value the institutional capital as it should be. I think that was a critique of the company for a long time, that they were only speaking to retail. And I completely understand that they're a much bigger company now that needs to have that presence. I also am of the belief that there has to be more of an effort to stay in touch with the retail investors. So I'll let that be what that is. But again, still my largest position, still extremely bullish on the company. Still trimming my position whenever there's an opportunity to pay some taxes, pay some tuitions, help someone out, help myself out, go do something nice for myself and the kids and the wife. But no, lithium is a sector that I am very overweight on. Copper is a close second. Silver and gold, a close third. So those would be some of the sectors that I'm writing checks for as we speak. And then uranium. I mean, I have pretty significant uranium exposure too. So that's where I'm putting my money, folks. That's where my checks are going here lately.
Speaking of reader questions, I have a little funny story as well, and maybe a teaching moment. So I get this package recently at my house, and it's from a subscriber. So I guess they're a good internet sleuth because they found my address. But it's an old school typed letter, on letterhead, and it's from a subscriber, a family office, and he's talking about Revival and how he's been a shareholder. And he sees the potential and he thinks it can break out. But he wonders why they just don't start producing on a small scale, like this company in this article he sends me in this Economist magazine, so that they can, fund a bigger operation, production, and then boom, they'll get the breakouts and the re-rating that, we all know that they're capable of. And it's funny because the article in The Economist that he's talking about, small scale gold production, it's talking about how likely, central banks have been on a gold buying spree, and likely how there's illegal gold that's finding its way into central bank vaults. And it's talking about mining in mostly Venezuela, but, other jurisdictions where there's illegal mining going on, right? And the subscriber is wondering, why can't Revival hurry up and start a small scale operation like these other folks are doing, right? And, so I read the article in The Economist, and it's talking about how they're illegally mining with cyanide and, their, labor exploitations and this and that, right? And it might seem like a straightforward answer to you and I, but, maybe worth expounding on for a second here, because maybe there's a bit of education involved in that. We're dealing with regulated companies in first world nations that have to deal with standards across the board, standards of, treatment of their workers and, safety, treatment of the environment and permitting and regulations. And so we talk all the time about how long it takes to get, a mine found and financed and permitted, decades in some cases. Yeah. And so that's the easy answer to the question, right? But anyway, I thought it was worth bringing up because someone took the time to write in a letter and said in the Economist magazine. But, we're dealing with legal gold mines. And then the other thing I was going to say is, some folks get the itch, right? Like the Moriartys of the world and, other folks out there that, take their own money and, go and try and do the gold mine thing, right? Like, have at it if you've got the capital and the chutzpah and, the wherewithal to go do that. But, here we're speculating on equities and there's a regulation component to that. So, that's the short answer, but anyway, didn't know what you would think about that.
It's a perfect segue to what I wanted to touch on the societal end of our podcast this week. The answer to your question is rule of law, which is something that America prides itself on and something that really, whether you agree with policy or not, the respect for rule of law in this country does differentiate us from most other countries. Is it perfect? Absolutely not. We just got a decision from one of the alphabet agencies in this country that's going to reschedule or relabel, if you want to simplify it, cannabis in America. And, it's so hypocritical to me. One, I applaud the decision. Two, it doesn't go far enough, in my opinion, for a myriad of reasons, right? I'll leave those alone for now because it'll turn into a 2-hour podcast if we get into those reasons. We can do that another time. But it's so hypocritical to me that we can launch a war on drugs knowing that the initial premise was marijuana, by the way, folks. It evolved into cocaine and crack and then all the other things that, were horrible and some that are, but it started as a prosecution on those that were smoking marijuana. And a lot of that was income class and racially inspired and motivated. And this was after Nixon commissioned a report to study the effects of marijuana. Well, the report came back and said, it's actually pretty fun and pretty fucking harmless. And he said, no way, we're starting a war on drugs. We're going to change that up and we're going to say this is the most dangerous thing. Your women are going to get raped. People are going to get taken advantage of. This thing is deadly. Nobody's overdosed from marijuana yet, folks. Now, we're not talking about fentanyl-laced marijuana. Reefer madness, exactly. That's the premise of the war on drugs. So it's interesting to me now with the question the gentleman had about why we can't just start, just heap leach it with some cyanide, just get the gold out and sell it, right? It's because of rule of law. And we're at a point in this country, folks, where if we don't start holding the agencies that are supposed to be enforcing this rule of law accountable to at least the same standards that the citizenry is being held accountable, then we're going to have an implosion between the citizenry and the alphabet people. And the alphabet people are all the agencies that are supposed to be in charge of maintaining and enforcing that rule of law, which brings me to the college campus protests, right? To me, it's all related. Are there bad actors on both sides of the debate? Absolutely. Are there racist and just malicious people on both sides of the debate that no matter what the situation are always going to be those people? Absolutely. But here in my hometown, I live just outside of Austin, right? In my hometown of Austin, I saw what was mostly peaceful protests, signs, chants, kids holding hands. And then I saw the same agency, the DPS, that didn't have the heart or the sympathy or the care, or you call it whatever you want, to save those kids in Uvalde, while one guy with a couple of semi-automatic rifles and ammunition, there were hundreds of these folks, these tough officers outside that didn't go in there and fire off a shot for 90-something minutes while all these babies got slaughtered and murdered. And then these same officers, and respect to the officers that are doing their job and do it well, we need more of you, and we need more of you to speak out, and we need more of you to really get in the way from some of the few that I saw roughing up 19 and 20-year-olds and roughing up professors on the UT campus because they have an opinion. Now, again, I'm not excusing the part where the bad actors are breaking into buildings and breaking down glass doors and windows. Look, same thing I said about the January 6th Capitol riots. If you're breaking a law and there's a law in place, arrest the people. That's why the law is in place. There is a way and an etiquette to do things with your own citizenry. Remind you, it's us, the taxpayers, that pay your salary. There's a way and an etiquette to go about enforcing the law without simultaneously being little tyrants, and especially when you don't have the heart to be the little tyrants you make yourself out to be when you're actually supposed to be a little tyrannical. That's my rant and rave on law and order. We absolutely need rule of law to continue to be a pillar of this country. But it has to be done justly and fairly. And it goes, on a macro scale, it goes back to the Jon Stewart rant, 3 weeks ago or 4 weeks ago when he talked about, how disproportionate the Israeli response has been in Gaza and how many children have died. 13,000 children last time that I looked. And how they're bombing hospitals and kids are being found with their hands tied behind their back in mass graves underneath the hospital. Again, what was done at that music festival to the group of Israeli concert goers was absolutely atrocious, and absolutely merited a targeted response, and absolutely merited to go after the people and bring them to justice, whatever that justice is. But at what point do we just acknowledge that we're making a lot of this up, right? And so I know we talked about it a couple of weeks ago when I was on here, and I talked about how we're if we're not going to listen to the UN, then why do we have United Nations, and why are we sending taxpayer dollars and pretending like what the UN says matters? If the US is simply not going to abide by the rules, then why just pretend, right? Let's just dissolve it and let's start it all over and let's find a better way. It goes from the macro level all the way to the micro. And, this last week at home here in Austin, I didn't like what I saw. And frankly, it happened all around the country. In some places, I'm sure were worse than others, but not all the officers are bad. But there was some stuff going on there that should be criminal.
It's a lot of nastiness out there across the board, right? And I've tried to almost keep my head in the sand a little bit, right? It's
Me too.
not my cause. I don't, really have a lot of skin in that. I try to see both sides, and so it just doesn't hit close to home for me. I see people talking about all sorts of stuff that I don't need to regurgitate here, but at the end of the day, I believe in free speech, and I believe in your right to believe what you want to believe in, and then express that as long as it's within the the framework of the Constitution, etc. And so, whether you're whatever you are, a Palestinian supporter, a jihadist, or a Zionist, or whatever words we're throwing back and forth at each other these days, good on you, man. Just don't hurt me or my family or anyone else, and do it peacefully. On the police side of things, well, one more thing before I get to the police, we talk a lot about the fourth turning, and so I think under the surface there's a lot of angst and animosity and anxiousness in the U.S. populace, particularly among that younger cohort that looks at the future and wonders what that looks like for them, and so they're looking for things and causes to gravitate around, and so. You mentioned bad actors. There's all sorts of different people that are taking part in these protests on both sides. But some I see are, and maybe I have this perspective as I get a little bit older. But some are young and idealistic, and probably still don't know what they believe, right? But are looking to sort of figure that out, etc. So anyway, they should be allowed to do that in a peaceful environment. The police, are the police. I've talked about them for a long time. There's definitely bad apples and. Some groupthink, and when they, get in that sort of groupthink with their shields and their batons out, it takes over, and sometimes they go too far, whether it's with rubber bullets or horses or, nightsticks, pepper spray, etc. I've seen some of the stuff coming out that happened with the Black Lives protests, etc. And so, there's been increasing accountability, I'd say, over the past couple of years, but still a lot of work to do in those institutions. And gosh, it's just so tough. There's a lot of, like I say, ugliness out there right now. But we should all strive to be better, I guess, and live more in the moment. And we can all be against, I think, human suffering and pain and treating each other badly.
That's it. And look, I'll say one last thing on the protester side. If I'm older and wiser now, I hope. I'd like to think so, right? But, you know, if I had a word to say, I have a 15, 20, and 25-year-old, right? I have three boys, three beautiful boys. If I was giving them advice, my advice would be, and this is the advice that I'd like to, you know, if there's any young, you know, 19, 20, 21-year-olds out there that are trying to figure it out and are passionate, I encourage you to be passionate. But you also have a responsibility to weed out the bad actors in your group, because they're not doing you any favors, right? It's almost like when you're out in public in a large group of friends and you have that one or two, that one person that you know just is a little bit more high strung than the others, right? You should know to keep that person out of certain situations for their own good and probably for your own good. And on the protester side, I encourage you to be passionate and active and voice your opinion, because our Constitution guarantees that. I want to remind both sides, the Constitution does not guarantee you know, walking up to the officer and throwing shit at them and, you know, cursing them out and doing all the other things in a physically threatening way. Like, you're going to get a response, and that doesn't help your protest. It doesn't help your message, and you know, it's counterproductive. So I would just encourage both sides. Like, again, like you said, it's not hard to just root for humanity. You know, I have Israeli friends. I have, you know, friends on the other side of things. I have friends that are police officers. I have friends from the Uvalde community. That community is heartbroken to this day. There's so much tension there. It's a heartbroken town that is still coming to grips with what happened and still trying to sort it out. And the politics have been nasty, and the cover-ups on some of the things have been absolutely nasty. And the lack of accountability has been nasty, and that hasn't helped bring any closure to a situation that probably will never find closure. So anyway, that's my long-ass rant. I say all that to say, be a little kinder to each other. Let's be passionate. Rule of law is important. It's important for the institutions enforcing it to do it in a just way. Because if it was my 19 or 20-year-old out there and all he was doing was holding a sign and just voicing his support for whoever he was voicing his support, and some officer went and hit him in the back of the head with a baton, it would lead to a situation. And vice versa. If my kid was a police officer, a young 25-year-old officer who, you know, was struck in the back by one of these protesters, that obviously is going to merit a equal response as well. So it cuts both ways. Fair is fair. Let's do things the right way, whether you're a cop or a protester, a law enforcement officer, or an idealistic kid, or just an idealistic human that just wants to see better things for humanity. Let's try to do it the right way, folks, so that we can express those opinions in a way that's passionate, but not obstructing of the bigger message, because it gets lost in translation sometimes on both sides of things.
Yeah, I remind you to,
that's all I got. That was my rant on the societal side. Welcome back, me, right?
Reach out to your people, you know, your elected officials when it's time for them to vote on things. I mean, you know, that's why you pay your taxes, which is what I was going to end on, right? I've been talking about your fair share and how taxes were going to go up. And, you know, I've been seeing nearly 40% on the top end of the, you know, federal tax spectrum there for people who are making over $450,000 a year. So you get to pay your fair share, you know, no matter which side of Israel-Palestine you're on, you know, no matter what side of left and right you're on, you know, blue and red. And so, and we haven't even talked about spying, which your people voted back into, you know, the rule of law, right? And so anyway, onward we go. That's why I try to focus on the markets.
What's the old saying? You get the politicians you deserve sometimes. We'll talk about that one next week. Anyway, I had to get that out. Listen, I'm supposed to remind you all to go to dailyprofitcycle.com/subscribe for Mr. Hodge, myself, and our talented group of editors' opinions and thoughts on all things cryptos, markets. Every now and then you'll get, you know, a hip hop lyric or two thrown in there and a reference to Bob Dylan, but all of it is free. Hopefully you find some of it useful and insightful. And that's all I got for this week, Mr. Hodge. What are you watching for?
No, that was good. Like I say, I think the markets are speaking pretty clearly right now. I'm evaluating these private placements that have popped up. You know, it's feast or famine sometimes, and have a lot to do with that going on. So I'm looking at private placements and deciding where to allocate those dollars.
I like it. Same. We have a couple of deals that we've participated in recently, a couple of more that I know we'll be writing checks for, a couple of more that we participated in once upon a time, a year and a half or two ago, that are private and finally coming public at a good time. So excited for all that. Excited to see if Patriot and Albemarle consummate their MOU. Looking forward to more results from Southern Cross Gold and Mawson Gold. What else am I looking at that's exciting to me? I'm looking forward to Kingsman Resources getting going and drilling its exciting silver gold district in Sonora, Mexico. I think that's going to be a pretty robust success story. I don't think it's a coincidence that the stock is up some 125% over the past month and a half. And, you know, a large part of that is it's got a tiny market cap and it doesn't take a lot of buying to move the stock. So I would ask you all to be patient, but I think that's a stock that can easily trade at many, many, many multiples of today's still tiny market cap. Early days in the junior resource sector, commodity super cycle, and a lot of fun to be had yet, folks.
Well said.
That's all I got, Mr. Hodge. We're going to send him off.
That's it.
What are you excited about, Nick?
The commodity market. So, no, well said.
Yeah. I like it. I'm Gerardo Del Real. This was the 268th episode of our weekly therapy session that we call Investing in Bizarro World, along with Senor Nicolas Hodge. Have a great week, everybody. Let's try to get on the side of just being good humans to each other. How about that, y'all? Be safe out there. Take care of each other.
That'd be nice. Have a good week.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.